Hey, it's Kevin and welcome back to the channel. So everybody's asking, what happened in 2020? What's going to happen in 2021? What's going on? What actually is going on? So today we're going to talk about our 5 predictions for the South Florida real estate market in 2021. Hey, I'm Kevin Morris, your South Florida salt, sand, and sun lifestyle specialist with South Florida Homes, Keller Williams. If this is your first time to the channel and you want to know what it's like living, playing, working, and enjoying the weather in Fort Lauderdale and the surrounding areas, hit the subscribe button and tap the bell to get notified every time we drop a new video. Here are our 5 key questions from 2020 and our 2021 predictions for the South real estate market. In 2020, tight inventories drove up the price of homes. Will that continue in 2021?
Ooh.
The short answer is yes. We believe it will continue, and while not a new trend, as historically, over the past 5 to 10 years, there have been more buyers than sellers. We may not see the double-digit price growth that we saw in 2020. We do expect prices to rise because, as to anticipate, the inventories will continue to be relatively low. Current forecast for the median home sales price rise is 5 to 6% for the number of homes for sale, and the number of homes for sale to continue to decline. However, the rate of decline should level off and possibly flatten out by the end of 2021 as we see more sellers than we did in 2020. The housing market in 2021 will look a lot more normal than it did in 2020. Will demand remain as strong in 2021 as it was in 2020? That's one of the big questions. We use 3 key indicators for our determination, and we're going to look at those indicators in our primary area for Broward County, Florida. First indicator is closings. The number of closed units decreased 4.5% from 6,500 in 2019 to 6,200 in 2020. The dollar volume of closed units increased 6.1% from 2.2 million to 2.4 million over the same period of time. The average dollar amount per closed unit increased 11% from $336,000 to $373,000, indicating that people are returning to the market and sellers are still actively looking at buying. Listings. The number of listings decreased 11.7% from 4,600 in 2019 to 4,000 in 2020. The dollar volume of listings also decreased from 1.6 billion to 1.4 billion over the same period. However, the average listing price increased 3% from $359,000 to $369,000, indicating market acceptance of a higher listing price. Great news for sellers. Our third key indicator, and probably the one that's closest to everybody's heart, is sales. The number of sold units decreased 4.5% from 3,200 in 2019 to 3,100 in 2020. The dollar volume of sold units increased 6% from 1.1 million to 1.2 million over the same period. The average sold price increased 11% from $335,000 to $372,000, paralleling the closed activity, again indicating market and consumer acceptance of higher listing prices, higher sales prices, and higher closing prices. So what does all this really mean? Due to the impact of the pandemic and the extensive shutdowns, and despite the dramatic inventory reduction, there was still significant activity with buyer demand. We predict we'll see closer to normal levels of demand in 2021. And while there may be some boost from buyers trying to take advantage of low mortgage rates, we don't see a lot of the catch-up buying others are calling for from people who think that they missed out in the spring of 2020 due to lockdown. Demand will be spread out more typically throughout the year, when we believe we will see a comparatively stronger spring in 2021 and a weaker fall and even weaker winter, like we normally do. The housing market was strong in 2020 despite high unemployment and economic downturn. What drives the market? The housing market follows the economy. The economy was doing well in January and February. Then in March, cases of coronavirus really started to set in. The economy decreased dramatically, and we saw a big pullback in the housing market. However, while the economy as a whole has been slowly crawling back, the housing market has rebounded much more quickly. Do you expect the trend of people moving away from the urban core areas into the suburbs to continue in 2021? We do. If nothing else, the last 10 months has resulted in a reevaluation of what homeowners are looking for looking for? Affordability, and they're looking for more space. They're looking for more value. They're looking to do a lot more in their home than they ever have been before. While buyers were looking in the suburbs before the pandemic has basically put it into overdrive. I think we'll continue to see people moving into the suburbs, but at a more normal rate starting mid to late 2021. How has the pandemic affected the process of buying and selling a home? That's a great question. We feel the real estate industry has done a remarkable job of doing business in a socially distant way. In addition to increased diligence with masks, gloves, disinfectant, and cleaning, we have seen an increase in listings that have virtual tours. We ourselves do almost all of our listings virtual, and many agents have started doing live stream for open houses. Every one of our buyers has requested that we go in and preview the house for them for a couple of reasons. Number one, let's make sure it's meeting their criteria. Number two, let's make sure that it's safe for them to go in. And while many aspects of the transition have become more virtual, a home for most people, especially if it's their principal residence, is the largest purchase they'll ever make. And most buyers still want to see a home in person at some point. If not before they make an offer, then certainly after they make the offer and prior to closing. Of note, however, is we've seen this to a much lesser degree for second homes and for investment properties. So if you like this video, please check out our video on how to get a house ready to sell quickly. Thanks, take care, and especially stay safe.